Good morning, traders. Richard here doing a quick Ichimoku cloud chart market update on the S&P 500 futures contract. I've got the E-minis here. Now, interesting, after the overnight news and the Russia invasion in Ukraine, futures traded quite low, heavily lower, and it broke through a cluster of support, previous support at 4262, 4236, and 4215. These old cloud chart support levels were violated. And then it sliced right through this cloud chart support level of 4181, only to rebound at the next cloud chart support level of 4106. So we have a short little rebound rally there, but do remember price action is below the cloud, so the overall long-term outlook on the daily remains bearish, and there's only shorter-term swing trades as the market rebounds from these key areas. Those are the only shorter-term trading opportunities. But from a long-term perspective, cash is about the best place to be, since the market is now clearly in a bear market. Since price action is below the cloud, for any bull market to resume, we need to be back above the top end of the cloud there. Let's take a look at the 4-hour chart. You can see there how the market rebounded from this 4106 cloud chart support level, which we highlighted on the daily. Now, a mean reversion type trade, when it gets too extended, too far from the cloud, it tends to mean revert back to key resistance zones. And this rally, if this rebound continues, we'll be hitting back down the resistance here at the 4236 zone, as well as this 4262 zones. So these are the upside risk resistance targets on the 4-hour cloud chart. If we fail through, if support fails this 4,106 zone, let's go and take a look where the next zone is below that. Hold on. We can go back to the daily to find that level. And it says 4012, so that's quite far away. 4012 is the next major support zone, and that coincides with this low there of that's the low of May. So there's still some downside risk, but do remember the market is now a confirmed bearish trend. Price action is below the cloud, so cash is about the best place to be with shorter term swing trades from these key support levels back up to the bottom end of the cloud. Let's take a look at the hourly. And see the hourly also rebounding from these zones. Watch out for 4181 to see if that support level has now become resistance. So there's upside swing trade potential back up to these levels. The first level would be 4181, and then the next zone will be this turning line, standard line of the cloud, and the front end of the cloud there at 4230. But price action needs to be back above the top end of the cloud here to be bullish. So hourly bearish, 4-hour bearish, daily bearish, and on the weekly now, we can see we found support within the cloud, but we're still above the cloud there. So the weekly is still somewhat okay. But do remember the market is incredibly extended. If we look at the monthly and quarterly, there's some significant downside correction risk in this current bear market in the S&P. Until next time, happy cloud chart trading. Bye for now.